So we're getting near the end of 2018. A lot's happened this year. We started the year with rates shooting up quite significantly, probably jumped up about 3/4 of a point in just a matter of a couple months. Things leveled off. And then just a couple weeks ago, we saw rates hit a high that we hadn't seen in 9 years. So we actually saw rates shoot through 5% up into the low fives. Now, since then, rates have come down a little bit. We're now trending at 5% on a 30-year fix, depending on whether you're looking at an FHA or conventional loan. Some days a little less, some days a little more, but right in that 5% range or so. Now, I really anticipate rates to kind of stay in this range for a little bit longer, probably the next couple months. And the reason is we expect the Federal Reserve to raise short-term interest rates in December. That's not going to be a surprise to anybody. Then you get into the holidays, light trading, not a whole lot really goes on. Then we're going to really pay attention to what the Federal Reserve does for 2019. Now, initial thoughts were the Federal Reserve would increase interest rates, short-term rates, 3 times in 2019. There is some conversation that may drop down to only 2 times. And that's somewhat significant why rates have come down from the highs that we saw a couple of weeks ago. We had jobless claims come out just recently that showed an increase in jobless claims. So, again, the old adage is bad news for the market, good news for mortgage rates. Good news for the market, bad news for mortgage rates. So, if we start to see where the economy may be kind of stalling a little bit, not going quite as hot as everybody thinks, mortgage rates should pretty well stay where they're at. Now, I don't think they're going to decline much, if at all. There's just nothing to support that, but at least keep them from going way, way up. So we'll have to pay attention to that significant data going into 2019 to see what the Feds do. So the next thing to pay attention to is the house price index. The Federal Housing Finance Agency reported their Q3 house price index numbers for Lee County, Charlotte County, as well as Collier County. And there's some really interesting numbers to take a look at. And what this really measures is how much does a house appreciate or depreciate over a period of time. So we're going to just measure Q2 to Q3. So for example, in Lee County, we saw a 2% increase from Q2 to Q3 in house price index, meaning if you bought a $200,000 home in Q2, at the end of Q3, it'd be worth 2% more, or $204,000. Okay. So now let's take a look at Naples or Collier County. Well, it was flat. So that means if you bought a $200,000 house in Collier County in Q2, it really didn't appreciate or depreciate. It stayed pretty much the same. Now in Charlotte County or Punta Gorda, well, it also went up 2%. So the same thing as Lee County. So we saw some modest appreciation from Q2 to Q3 that occurred in 2 of the 3 counties that we're in. Now, the real interesting stuff is the annual numbers. So if we pay attention to Q3 2017 to Q3 2018, there's some big differeces in each market. For example, Lee County was only a 3.5% increase. Okay, so even though we saw a 2% increase in Q2 to Q3, before that there wasn't much of an increase to pay attention to. So the year-over-year number was only 3.5%. Now, how about Collier County? Well, they were up 5% year-over-year. So again, if you look at the data 1 year ago from today, the prices went up 5%. And now you look at Punta Gorda, it was 8%. It went up 8% from Q3 2017 to Q3 2018. So again, we're seeing many different numbers. Lee County being at 3.5, Collier County being at 5, and Punta Gorda market being at 8% annual appreciation. Now, it's important because there's been a lot of conversation about a housing bubble. Well, we're not really seeing that, are we? We're seeing prices still appreciate, but just much more modestly. And I think you're going to see that continuing into 2019. My prediction is about a 4% annual appreciation rate rolling in through 2019. Throughout all the markets, they should be right about in that number. That's my prediction. So we'll see what happens. The final thing I want to just share with you, you may already know this, but here at Hamilton Group Funding, we are giving an incentive towards closing costs for all veterans. We are waiving all lender fees. It's a $1,500 incentive. So regardless whether they do a VA loan, FHA loan, conventional loan, we're giving them a $1,500 incentive, basically no lender fees. It doesn't matter whether it's a primary home, second home, investment home, anything, any type of loan, conventional, FHA, VA, it doesn't matter. Okay, so a nice incentive there. And if you're interested in some free single property websites for your listings, contact me, Nathan Davis, 239-898-8841. or catch me at my website at agentslender.com. Have a great weekend.